Grand Portage Resources' Herbert Gold Project in southeast Alaska highlights increased gold resource, indicated and inferred, of 860,000 ounces, in excess of 10 grams per ton gold. Expansion drilling is planned on the Herbert Gold property for the summer of 2019. Grand Portage Resources trading symbols are GPG on the TSX Venture, GPTRF on the OTCQB, and GPB on Frankfurt. For more information, please visit our website, grandportage.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Tim Cyclesman Wood, editor of Cycles News and Views on Cyclesman.com. Welcome back to the show, Tim.
And Jim, thanks as always for having me.
Tim, it seems the pattern for the Dow has been it goes down 800 points over 2 weeks, and then it's back up 650, but it never quite gets back up to the high that it set. Is this a pattern we're going to see from now on or for some time?
You know, the Dow is at the same level it was at, the Dow and the S&P 19 months ago. It's basically back to the January 18 highs. And, it's just comical to watch. The system damn near failed back in 2008, 2009. And everything since then has been based on monetary policy, and more lately, lies and deception that has, led to the biggest bubble, and we've talked about that before, to the biggest bubble and most manipulated bubble in history. And that's a fact. That hasn't changed. And that's what we continue to see. Now I think that they're pretty much finding themselves in a box with the monetary policy, and it's all based on, lies and fake news, if you will, and reports and that sort of thing. This has gone on so long that I don't even know if people realize what normal is anymore. But it is. It's a bubble built on fake news, fake tweets, fake government statistics, record debt levels, 10-year low to zero interest rates, massive stock buybacks, fraudulent accounting practices, fake deceptive earnings, collapsing commodity prices of late, and declining interest rates. I mean, look what interest rates have done since November of last year. All the while we have, the leading economic indicators could continue to deteriorate, and we're told that everything's okay. And just yesterday, someone brought it to my attention that, the Fed released their beige book, and they said in the beige book that, and by the way, the beige book it's the Fed's summary of current economic activity. And they said that labor rates were tight. So I looked up what was actually said in that report. If I can read this, a couple of lines here. It says, overall districts indicate that employment grew at a modest pace on par with previous reporting periods. Firms and staffing agencies universally cited tightness across various labor market segments and skill levels, which continue to constrain growth in overall business activity. So labor is so tight that it's constraining growth in overall business activity, yet, if you look at the data, we have a job participation rate at 63%. So how is that? How do you reconcile those numbers? I don't know. On top of that, the consumer is left with, according to the job participation rate, you can look at the flip side of that. There's a 37% unemployment rate if you look at it that way. And then, on top of that, you have the increased cost of housing and medical costs and taxes and food costs. But then you release some fake report that's revised later down the road, or some bullshit tweet, and the market rallies. It's insanity.
How can you tell, as they say, the BS from the sugar?
I've come to the conclusion that pretty much it's all BS. This China thing, has been used to game the market now since I know last November. I remember it. And it's like targeted news. You see, this market will get on edge. You mentioned, I think in your opening comment, you talked about how you'll see the market kind of crack, and then it'll come back, and it'll crack, and it'll come back. Well, every time one of those cracks appear, and you get to a technically important juncture where something's about to kind of, break, it won't quite break, but if you'll pay attention, if you look at it from a technical perspective, and that's hard to do because, everybody doesn't have those eyes, but when you look at it from a cyclical perspective, particularly, right as you get on that brink, oh, there's a tweet. Or, we got a deal. China called, we got a deal. And I don't even remember now when it was because there's so much of this stuff going on that it was, I don't know, a couple of months ago, maybe back in the early summer, I don't know. But someone sent me a message and they said, now he's going to do tariffs on Mexico. And I immediately replied. I said, nope, that's just another tool so they can remove the tariffs and goose the market. That was like, I want to say over the weekend. It was, and I want to say, I'm saying this from fuzzy memory. I know the market was closed during that time. I want to say it was a weekend. And I said, and lo and behold, it was like that Sunday night. Oh, remove the tariffs, market rally, goose the futures. That's the game that's being played. That's how this bubble has continued to this point. It started with the monetary policy and led us to this point. And for the last several years, now it's being played with this insanity with news, just gaming the market. And yet we're told everything's okay. Well, if everything's okay, why all the desperation to hold it with this sort of practices? We've also talked about how the non-U.S. markets are leading, and they are. They led at the preliminary top. I say preliminary top because we have a top within a top trying to form. It started trying to peak back in 2018, and then we went down into the 2018, low, and now we got this secondary top or a top within a top, if that makes sense, trying to form. Back in 2018, the non-U.S. markets led. We talked about how the Dow and the S&P were providing cover for all the stuff that was happening beneath the surface. Well, now that's happening again, it's been going on, I say again, it's been going on, I guess since really April to June timeframe this year, but it's happening at two different levels now because we have this larger top that began back in 2018 also trying to form, as well as the rally out of the December low, if that makes sense. Well, anyway, I'm getting wordy. But that said, the non-U.S. markets continue to lead. If you look at the value line stock index, U.S. stock index, it's at the same level it was in 2007, which is the same level it was in 98, by the way. And yet, we see, if you look beneath the surface, like the European banks, someone pointed out a European bank index to me. And the European banks are in trouble. I mean, I've been aware of some of the, Deutsche Bank and some of the other banks and what their stock looks like. But this thing is, it's back at 2012 levels, which was below the 2009 level. And then, all the while while they're holding these markets, with the U.S. markets up and it's providing camouflage for all this deterioration, what you see is the continued deterioration beneath the surface. So that's not being changed. Stock prices are being held and elevated, but the deterioration beneath the surface continues. And so while we're being told everything's okay, it's not okay. It's an illusion. We live in the matrix. This is not normal. It's a disaster. It's not sustainable. But until the U.S. markets crack, nothing really matters. In the end, I think it's an absolute disaster, and they will have destroyed the system. Like I said, it damn near failed in 2007 and 8. But here we are again with this larger top trying to form, and it's not going to really matter until it matters. At some point, this underlying stuff is going to weigh on the market so heavily that nature will take its course, or gravity will set in, or however you want to say it. But until that happens, they continue to game it, then, hey, it is what it is.
Well, back in 2008, banks were considered too big to fail, so the government bailed them out, but now they have legislation in place that allows banks to dip into your bank account to settle their accounts. Well, if the government's encouraging very low or negative interest rates, how are banks supposed to make money and stay financially healthy? And if they don't, of course, they dip into your bank account. So we should be very concerned about this. Do you think?
Absolutely. That's absolutely correct. And that's, I think that's what we're seeing with some of these European, the bank indexes that are so low. And someone else, a listener actually that listens to this program had called me this morning, and he told me that, some of these European bank, I guess, presidents, CEOs, whatever it was, I don't remember exactly who he said, but they were talking about how the low and zero interest rates were killing the banks. You're spot on. And then ultimately they're going to take your money because of their bad decisions.
Well, I wish they'd pass legislation if things go wrong because of what the politicians do. They're the first ones to see their bank accounts drained, but I think we'll never see that.
Of course not. And then this whole drain the swamp thing, it's such a joke. Look, I know that we've been talking about the bubble since you and I have been talking. And, even Trump talked about the bubble before he came into office. There's no shortage of YouTubes, where you can go find those quotes. And it's true. It's a fact. Just by any historical measure, we talked about that from a technical perspective, from a valuation perspective. We beat that to death. But they've managed to hold it. And like I said, while on the one hand, the market is continuing to hold, on the other hand, the rot beneath the surface continues. They're not changing that. You can lie about the statistics all you want. It's not changed. And so I don't know how long this can go on, but I am convinced that it is the bubble that it is. I am convinced that it is the disaster that it is. I am convinced that it's going to end as badly as I think it's going to end. But until they absolutely lose control, it's going to continue. But, on that note, some people say, well, they got control of this and it can go on forever. No, it can't. How long, I don't know, but it can't go on forever. The insanity cannot go on forever. There has to be a cleansing and a purge of not only the financial bubble, but the fraudulent practices that have gone on in association with the bubble.
We'll have more with Tim Cyclesman Wood right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Welcome back. We're speaking with Tim Wood. Tim, General Electric has been accused of having very deceptive accounting practices, yet we don't see any action being done about it. Does the company have to go bankrupt before somebody goes, hey, a light bulb should have gone on?
Hey, that's the new normal. That's the world we live in. That's what I'm talking about. It's at every level and it's rampant, but nobody cares. The party goes on. I don't know. You hear talk about the non-GAAP accounting principles. Really? How is that acceptable? When I was in school in accounting, it was stressed that you abide by generally accepted accounting principles. That was the whole premise of accounting. Otherwise, you just throw some shit at the wall, and whatever sticks, sticks.
Well, yes, what happens on one side of the balance ledger is supposed to be accounted for on the other, but like you said, there's a gap between them. So, has hope replaced facts?
No, I don't think facts, I don't know. I don't guess facts matter anymore, at least not at this juncture. It's just, like I said, it's just one big fat lie, and nobody cares. I think I don't fully understand. I don't pretend to understand. I think it's just the nature of the bubble. It's greed. It's the deceptive environment that we live. It's all of the above. It's just the nature of the bubble. And until, like I said, the greed turns to fear and everything is exposed. I mean, look how the fear, the fear that we saw back in 2007, 8, 9. I say 7, it started to crack in 7, but 8 and 9. I mean, this is far worse than that. And when this greed turns to fear and it's all exposed, then maybe some of this stuff gets attention. But right now, while everything's good, who cares? Party on.
We'll have more with Tim Cyclesman Wood right after this.
Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Tim Cyclesman Wood. Tim, gold today dropped $35, and I mentioned before we went on the air, there used to be a time that was the price of gold, but nowadays, of course, it's just a little blip on the radar screen. But we've had a tremendous run in the price of gold and silver recently. Is this sort of a dark shadow that perhaps that run is over?
Well, let me explain gold. I mean, number one, we talked about how it looked like the 9-year cycle top was in place, and it did. And I may have talked about this last time, but that's okay. Maybe someone else is listening and didn't hear it, and I'll explain it again. Based on the data at hand, the structural formations, the things, the violations of previous cycle lows of a certain degree, and so on and so forth, long, complicated stuff, but based on the data at hand, it did look like the 9-year cycle top was in place. And based on that data, if I were in those shoes again, I'd have to make the same call. It was a sound call. So the rally that we've seen out of the lows, this last year, have on the one hand, because of those, the evidence that was suggestive of the 9-year cycle top, and now this rally that has followed, on the one hand, yes, this is an unprecedented rally in gold. No question. It's unusual. All right? But here's the problem in looking at the whole picture. This rally has not been confirmed by the raw materials index. And it's a historical fact that they move together. I mean, it's a simple overlay of the chart, and there's no time I can point to. Now, of course, things don't turn tit for tat, and there are short-term periods where things can be out of sync with one another, but overall, they move together. And so that is a problem for gold. But joining the raw materials data, since the weakness seen in raw materials and the rally in gold, is the CRB index itself. Again, they move pretty close together in the same sort of cyclical rhythm pattern and historically, and so you can't deny that fact either. Then we have copper and some of the other base metals that have broken down and not participated in this rally. Then we have, the XAU and the HUI, which is some metals related, gold, copper, silver, precious metals, and industrial metals related indexes. And there too, that while they have rallied, they have not moved above previous, like for example, the XAU and HUI, it hasn't moved above, I think it was its 2016 high, which we thought was the 9-year cycle high. And I look back in history and I can't find an example where that you have had such a rally this far into a 9-year cycle and the gold stock's not confirmed. And so, yes, on the one hand, it's unusual. On the other hand, it's not being confirmed, and I think it's probably a fluke and not sustainable. Now, with that said, the real test is about to come. I've been writing in my updates that gold was at or nearing an intermediate term top. We have some timing for when that intermediate term low is due, and I'll be covering that in the letter. We get down into that low, and then the real test is going to come. That's the test. Not this little not this intermediate term rally, the next one. When we get to that bottom, depending on what happens there, that's the real test. If gold can get a bid there, then okay, something else is really going on. I mean, something else is truly, really going on. If it doesn't, then gold's going to get back in sync with all the other stuff, the raw material, CRB, so on and so forth, and it's going to get hit hard. So the real test is coming with gold.
Tim, thank you so much for chatting with us.
Thank you.
My guest has been Tim Cyclesman Wood, editor of Cycles News and Views on cyclesman.com. If you have any questions for Tim or any of our other guests, you can send them to info@howstreet.com. Find us on Twitter @HowStreet, our YouTube channel, Talk Digital Network. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.